So let me get straight into a conversation with Manish. Thank you, Manish, once again. Manish, tell us a little bit about your background, your personal background. Where did you come from? Where did you grow up? A little more about you.
Sure. So I'm basically from the state of Bihar. Born and brought up in there. Did my engineering. Post that, somehow landed into a BFSI sector with banks. Started working as a product manager with Citi. Then moved to HSBC. Worked in various functions, various geographies, mostly in North America and Latin. But again, as I said, it's different function, different products that work for. Then worked there for HSBC for close to 7 to 8 years. After that, there was an acquisition of HSBC, one of the HSBC business or Cap1, which led the entire unit to move to Cap1 to support the business. So that was the time when I actually started thinking about what to do, because just like all acquisition does, so we started thinking like what to do, what not to do in life. So the option was either to move to another bank or to do something else. The bug of being of an entrepreneur bug was from there from quite some time, and started thinking, well, what else to do what else has to be do in terms of making sure that to do some differences in the life of people. And that's the time when we started thinking on what to do, right? And the problem with India and lending is phenomenal and has been growing all day. So to just give you some kind of a number of figures here, the gap between the demand and supply of lending in MSME itself is more than $100 billion in India. Wow. Right now, to take the scale, compare it with the scale, the entire e-commerce market in India is not even a $20-30 billion market, right? And here we are talking about the gap itself, which is so large. So that's one. The second is, it was very clear that the usual mode of credit is not working, which is banks and NBFCs, right? So if they would have been banks are there for quite some time, so it have been solved, right? The problem was fundamentally collaterals, asking for collaterals, hypothecation, and all those things.
Sure.
So then what we thought that, what to do. So we thought of there is enough money in India.
Okay.
There are enough investors who want to invest in India's growth story.
Okay.
At the same time, what is also issues is that the companies are not getting sufficient facility. Right?
Okay.
So from that theory, we started doing some kind of a research and say that can I come up with a business model which can merge these two worlds into one thing, right? So how to do that, right? So we started looking into the books, and we realized that there's always an asset into some companies' books, right? It's just that they never know how to monetize it.
Sure.
Right. So what we did is, so let me take a step back and let's explain you what this asset is, right? So let's say I'm a new guy. I'm did some education, wanted to start a new company.
Okay.
Right. Get some funding from my friends and family who's supporting me. Get hold of maybe 40-50 lakhs. Right. Become lucky. Get a contract from a large corporate to supply them some product or some services.
Sure.
Use my 50 lakhs to create the machinery, everything, and supply them, let's say, 50 lakhs worth of goods.
Okay.
Right. Now the company says that okay, you have supplied me goods, but the payment is going to happen in 90 days. Right. Now what will I do? I either will go to banks and ask the banks to give me some more money so that I can produce next month or next day.
Right.
Right. Or I will have to, and when I go to banks will ask me for collaterals.
Sure.
But I already have taken loans and from family and friends to start the business. So I have fundamentally nothing to collateralize to banks. So what I do is I started putting up my own personal savings, like house as a collateral and everything. That was the option earlier.
Right.
What we said that, hey, if the invoice you have raised against a large corporate, a large corporate has already accepted the invoices, so only the matter of when they are going to pay you. Why don't you sell this invoice?
Okay.
Right. So this is, and let's say the corporate says that after 90 days I'm going to pay you 50 lakhs rupees for the invoice. Right? Why don't you sell this invoice right now at, let's say, 45 lakhs or 49 lakhs, right?
Sure.
You can take a cut of 1 lakh on your profit margin, but you immediately get 49 lakhs.
Right.
You produce again tomorrow, you make another invoice,
Sure.
again give it to him.
Sure.
So your profit margin is reducing, but your profitability, the entire profit as a number is increasing, right? Because you're producing more times, right? So instead of producing 4 times a year per year,
Sure.
now you may be able to produce 12 times or more than 12 times a year, right? So your profit is going to increase fundamentally.
Right.
What we call it is fundamentally is a capital velocity, right?
Okay.
It's you are not working, it's capital is working.
Right.
Which is basically that I have an asset in my books as in terms of account receivable.
Sure.
Right? If you remember your, and most of the MBA students from finance would try to recognize it. And the balance sheet, there's assets and there are liability. Right. You put your account receivables as an asset. You put your account payable as a liability, right? So when I put account receivables in my asset, the counterparty who's against whom I receive an invoice also put it as an account payable as a liability, right? So what happens is when I go to the market and say that I'm selling an account receivable of my books, I'm also selling an account payable of somebody else's book, which is a liability on his book.
Sure.
Right? Now assume that I'm a very small company, but my counterparty is a MNC AAA rated company.
Okay.
Right? So I'm selling. When I say that I'm selling the account receivable of my books, I'm fundamentally selling a liability of his books.
Right.
But I'm selling it at my cost of fund. So it creates a spread. Right?
Sure.
When it creates a spread on the paper, it becomes a financial paper which is tradable.
Okay.
Right. So that is the fundamental concept on which we started this entire journey of KredX. We say that you have a paper, but it's a paper of a more better credit quality customer or better credit quality your client. So you sell it at your cost of fund. You get your money right now. Okay. Right. You are happy. The investor who is holding down the paper for 90 days, he's happy because he get a good spread on the paper. Sure. And you are getting the money and nothing is, you don't need to collateralize your house, your land, your machinery and all those things. So that is the simple concept on which we started working upon. Now, if you, again, if I just go a little bit on history, it's not a new product per se. It's not that we have invented a new product. What is there is in India is always known as hundi. Right? So fundamentally, hundi was there all the time. What it was never being done in the way that we have done, which is use technology, use data to literally make hundi a democratic product. Right. So earlier hundi was used to happen is like, okay, Amit knows somebody, he introduced it to me, and I had a financial. So Amit become more like a guarantor in between, and we are doing the trade. But now with the platform with data coming into play, people are saying, hey, I don't care who's the other person. If it is on KredX platform, you've done the credit evaluation and all the due diligence and entire fencing, then I'm good to go. So now they started putting up money and buying those invoices. So in a way, what we did, we basically democratized the entire process of the in this.
Wow, I'm sorry. So Manish, I'm going to take you back a little. So you're saying this was the hundi system. Weren't the large banks already doing this?
Well, in bits and pieces, yes, they were doing it. But the problem with banks is, see, when I go to the bank, right? Bank knows that this person is coming to me, he has no other options, right?
Sure.
So why to sell him a product which is only 90 days product? Right. Why can't I sell him a term loan or a CC or a OD, which is a more suitable product?
Right.
But at the same time, when you say that, okay, give me a term loan or a CCOD, I can ask for collaterals.
Right.
Right. So fundamentally, it always boils down and go back into giving collaterals. We have clients who has been with banks for like, few years before starting with us. Banks has taken 15 crores of collaterals from them and given them a 5 crore limit. On top of taking their entire invoices and everything into picture.
Wow.
Right. So we recently has taken up from one of the other large bank, a client where the client was growing very fast. And banks are saying that, hey, I cannot keep on giving you a limit increase every month. Right. And I have my own concentration risk and my processes. So, I cannot, but why don't you go to KredX and take it up? So, we becomes like when banks are not supporting this, we are there, the banks are supporting this, still we are there.
Right.
And banks have started pushing out cases to us saying that, hey, this is working better than us. It's less inefficient than our systems are.
Wow. So you're saying that the entire ecosystem, the industry, the banking ecosystem is now pushing towards.
Yes, in a way, we have met the banks realize the power of invoice discounting if it done correctly. So it's not that bank was not doing it bill discounting earlier, but bill discounting was always marred with frauds You know, a lot of banks has literally burned their fingers into it. So we were telling them, you know, how exactly bill discounting could be done in a much better way. So yes, in a way, we have changed the way the entire dynamics of bill discounting happens in India.
Wow. So let's go back to when you started KredX, right?
Sure.
The initial days, you know, so you had this idea in your mind, I'm assuming for a year and a half or so, right? So how did you start off? I mean, I think for most people who aspire to be entrepreneurs, the real challenge is in taking the leap. And if you could walk us through how you went around.
Sure. So I keep telling it to everybody whom I meet is, and nowadays because of media, startup and entrepreneurship has become too much hyped up. But I keep on saying it's a very difficult path, and you need to get obsessed about the problem that you're trying to solve.
Okay.
If you're not getting obsessed about it, it's become very difficult because after a while, the only thing that can keep on pushing you is your own obsession, or what I generally call it is the itch. Right?
Okay.
You remember all generally in our childhood days, if you are doing some mathematics problem, right, and it's not getting solved, you start getting that itch. Is like that I'm about there, I can solve it, but it's not getting solved. And that is not letting you sleep also, right? That's what I call is the itch, right? That itch has to be there. If the itch is not there, then you will basically give up very easily. But if the itch is there, that obsession is there, that no, I can solve this problem, and this is the problem which is fundamentally meant for me to solve, right? Then you have to go, and no matter what comes in your way, no matter whoever is trying to pull you down, it doesn't matter, you will just keep on going. Because again, for founders, for entrepreneurs, it's very, very lonely. It's very, very lonely in terms of you need to go against anything and everything that comes and your way. Right. So you know, you can say that it's all against one and one against all kind of a theory, but that's what makes it pushing.
Wow. So so yeah, you said obsession, and I think I'm going to stay with that for. I'm going to come back to that in a little while. What were the other key areas that you had to focus on? You know, maybe how did you identify your co-founders? How did that happen? You know, because you brought in a certain amount of skills.
Yes, yes. So you know, having a co-founder is very, very necessary. The reason is why, because as a human beings, it's always there is ups and downs in the that comes in the life of people.
Okay.
Right? So what happens is when your down is coming, it's very likelihood that at that time you will drop the ball and say, hey, I don't want to do it now. Right? At that time, it's required to have a co-founder who's probably up is going on, and he will push you up and he say that, hey, it's okay, right? We can still make it out. Right? And maybe when his down is coming, Europe is doing. So it's basically you keep on pulling. If you keep on pulling each other out. More than complementary skills and other things is that part which is very, very essential, is that there's somebody to pull you out when there is a down moment. And there will be enough down moment. There will be a lot of times when you feel frustrated. You started questioning what the hell I'm doing. You know, why I started it. My life was going brilliant, right? All those things. But that is the necessary time. It's where somebody has to come and say, it's okay, you know, shit happens, but let's go up, let's get up and let's do things, right? So that's why it's very essential. Now, how to choose a co-founder? Typically, I would also go with how people say is whom you are comfortable with. Though, yes, you should look for people who has a complementary skill set, but you also need to see that people whom you are comfortable with, because there's a lot of ups and downs. There's a lot of moments will come where ego gets flared up. You know, it needs to be required that people are very comfortable. Even though you fight, it's like siblings, right? You're fighting with each other, but you love each other, right? That kind of thing. So you need to see where you are comfortable with.
Okay.
Right. So those things are definitely essential.
Wow. And when you took the plunge, Manish, how did your family react to the entire?
So it's very funny. Actually, my wife pushed me more for it, because I always have that entrepreneur bug, and I keep on coming with something saying that, oh, I can do this, I can do that, and this is the idea, that is an idea. So my wife said that, you just go ahead and do it, because if you don't do it, you will like die. Right? You have to go and do it. And every day you are seeing so many problems, and you are saying, hey, it's so easy to solve, you're not solving it. So why don't you take a problem and solve it? Like, take it, do into it rather than anything. So I get a lot of support from my wife. Incidentally, I think fortunately, or I don't know, what. But at the same time, when I started KredX, my wife was pregnant and I was having my first baby also.
Oh.
So I keep on saying that I have, two startups. One is at home and one is at office.
I'm sure.
And both of them are the same age.
Wow, amazing, amazing. So when you started KredX, one of the other pieces that people keep looking at is how do you manage your finance, right? One is your personal finance. How do you raise capital for your startup? Any thought or any insights into?
Yeah, I would suggest that anybody who wants to start an entrepreneurship, they need to make their family comfortable. Yes, a little bit down in their life, living standard is fine.
Mhm.
But if you feel that your family is not getting what they are earlier getting, and they are getting deprived of the basic things, you will not able to survive too long.
Sure.
Right? And believe me, it may not be easy, right? You will be lucky if you're getting funding earlier. You may have to struggle a lot to get funding.
Sure.
There are a lot of startups who struggle, has closed down a bit. So you need to make sure that when you are taking the plunge, at least you don't have a lot of liabilities on your side. So there are two kinds of liabilities. One could be a financial liability towards, like, to external third party like banks, etc.
Sure.
But you also have a liability towards your family.
Absolutely.
Right. So make sure that your at least both the sides are taken care of, and or there is some second set of income which is there. Or let's say in my case, my wife was there to support me for a while. So all those things. And in my case also, I'm a seasoned professional, so I have my own corpus building. So that way, all those way have helped me a lot. I definitely say it takes help of family, friends who can take a early faith on you, become your early adopters of the products, and go on from there.
Nice, very interesting. So let's get back to KredX, the initial days. What were your initial challenges? Business-wise. If you name your top couple of challenges, and how did you go about managing them?
Yeah, I think a lot. Since this is when we started doing it, this was fundamentally the first time anything like this has been even thought of. So it's a very obvious business, but for some reasons, people thought that it's going to be very hard doing it in a tech format or using data. So when we started, the first challenge was regulatory, right? Legal and regulatory, how to do it in a scalable model, right? So only was happening on a physical format. There is physical touch, there are emotions, the relations that is involved.
Sure.
Now you're saying, hey, I'm going to remove all of these things and replace it with tech, right? And it's India fundamentally where people always question tech and say, hey, anything is online is toxic, right? So going from there to say that how can I make sure, and again on top of that is financial services is fundamentally trusted, right? My father is still banks at SBI because he only trusts SBI, right? Those kind of statement you will see very, very often as compared to saying that, oh, it's a new bank, let's go ahead and open it.
True.
So so there's regulatory thing. So we need to go and talk to a lot of lawyers, and most of the opinion initially were, no, it's not happening, we cannot. So I literally have bought these many law books, gone through all the acts, everything, and started questioning lawyers and saying that which act is saying what. So that is the time when you start pushing people to the corner, they will also start going through there and not making off the hand comments, and they say, no, let me also do my homework. So they went back, come back. Parallel, we are doing the first product, creating like MVP, setting up teams, looking for fundraise also. So a lot of things goes parallel in terms of right, and plus your own family is needs your time, and also you need to do a balancing act, and balancing act could be very at various ways. If you feel that, oh, I'm only good at something, drop that thing. You have to be good at everything. You cannot say that I'm just a techie or I'm just a finance guy, so I cannot do tech, or I'm a this guy, so I cannot do that. I literally be in my office boy to the guy who was standing in the line to get the stamp papers, to doing a cold calling, to product designing, to like writing codes, to everything. So you become like a one member company. So that's the way you have to do everything to start with. From as I said, I literally bought a lot of law books to go through legal because I need to be comfortable with what I'm doing. Right. So all those things keeps on coming, and it's a sometimes feel a lot. But if, as I said, it's difficult. But if you take a plunge, possibly you will enjoy it.
I'm sure. Very interesting. So So regulatory is one, and guys, just for all of our references, what Manish started off with, which is obsession, right, or the zeal to do something. Let me rephrase that into a zeal to do something. So Manish was right from, like he mentioned, said, an office boy to a lawyer to the product guy to the tech guy to someone who's going out to the market, raising funds, trying to raise funds. Let's put it this way. So, how did your first investment come about?
We are meeting a lot of VCs at that time, and few VCs understood what we are saying, trying to do. Few VCs doesn't understand what we are trying to do. Few VCs, we met some few angel investors also, who was also skeptical in terms of, yes, the idea looks good, but I'm not sure if this is doable, kind of a thing also. So from all those things, it was, I would say, we were discussing with few, and I mean, just to give you a magnitude of numbers, I think during my seed stage, I spoke to more than 80 VCs.
Wow.
Right. And I was going through extreme back pain at that time, and I was literally on roads most of the time, even talking and going and all those things. So, out of 80, maybe around 50 does not even understand what we are trying to do. Right. So that was become difficult at the seed stage, because people start questioning that, is it a napkin idea? Is it a doable idea? Where you are doing what you are trying to do, kind of thing. I think the first one was pure play serendipity, I would say. I was just came from a meeting, and having my lunch, and I got a call from Sanjay, who was who's a managing partner in Prime, and he said, "Hey, I've heard that you guys are looking for fund. So are you free to meet tomorrow?" And I said, "Sorry, I didn't get your name, but who are you?" So he said, "I'm a managing partner." So he said, "I'm a partner." I said, "Oh, I mean, if it is a partner, I don't mind meeting." So I went to meet Sanjay. The meeting was supposed to be 1 hour, become a 3 hour meeting. By that time, I was pretty sure that these guys are offering, giving us the term sheet. And in fact, we had follow-on meetings, and immediately, like within 2 days, we got the term sheet, and it closed very faster. We parallelly has decided even before that whether the fund will happen, not happen. We'll start the business immediately. So we have started our business earlier also.
Okay.
And we said that we need to get the first paying customer.
Okay.
The good part is we never incentivized or discounted our entire thing. So we said that the first customer will come, has to pay to us. And even though our product was at that time was not good, far from good, I would say more I would say more shitty product that was there, but still, there was early adopters. Yes, there was. So my first transaction on my platform was absolutely from people whom we don't know. So typically, it has always been said that startup, the first early product adopters are your friend and family. Our first customers on both the side, being a marketplace, was actually people whom we have absolutely no idea, we haven't met of. And they said, "Hey, I'm gonna take a leap of faith." And thanks to one guy who said, like, "Hey, I'm actually ready to give money." Right? Taking money is easy, giving money is hard. So somebody saying that I'm taking a leap of faith and become an early adopter because I'm sold on what your guys are doing. And here is the first check is definitely was a lot, I would say morale booster for everybody in the team at that time.
So for me, Manish, one of the takeaways from what you just said is that your MVP is work in progress. Your initial product is work in progress.
Absolutely. I would say, I mean, one of the learning from what I have done is, don't take a lot of time to ship a product out of the window to your end consumer. There's a statement I have made with my team as recorded, and I keep on playing is like, don't wait for perfection to come. What is perfect tomorrow today may not be perfect tomorrow. Right. So I keep on saying time is the most important factor than anything else. Design, perfection, nothing is important. What is important is time. So whatever, even if you feel that the product is far from being better, just ship it out. Let the market give you feedback. Let the customer give you feedback. If you think you know your customer will tell you no, you don't know them. right? So it's very, very important to go out in the market as early as possible and say that, hey, here is this is whether it's MVP, whether it's whatever.
Sure.
Right? That's one. The second thing is you need to give customer an experience, right? Customer is not asking for a tech experience or a they're asking for an experience, right? If your experience are good, if they're happy with your service, whether through tech, whether through phone, whether through anything, they are going to become a repeat customer,
Sure.
right? Unfortunately, India customer service is not being done in a good way. People are only interested in selling; they're not interested in services, right? So even if you buy like a big luxury car or a big house or whatever, nobody is interested in servicing you after. There's nothing called post sales,
Sure.
right? Though everybody claim, but we all know how bad post sales in India are. So we were very convinced from the day one that we are going to give like an amazing experience to all our clients.
Okay.
So no matter whatever we have to do. When we grown up a little bit, we decided that one of the first position that we created in our company was called a customer delight officer. And my team member asked me why customer delight, why we cannot call it customer service officer or customer executive. I said,
Sure.
no, it's the job is not to service, it's fundamentally to delight, right? And given sweeping power to the person who had got hired, that go and commit whatever you want to commit in favor of the company, on behalf of the company to make the customer happy. And that's why the idea is to make the customer happy and not to make them be just satisfied, right? And that's why the name itself is customer delight officer. And we still have that Presidio concept in KredX, and we have a a 3 or 4 member team just dealing with the CDO directly. And the CDO decks reports almost directly to me. So that's where we go into it, saying that hey, you need to be giving a good experience to the client rather than giving them all the time a better product. People are more hungry for better experience rather than saying that it's a better product or other things.
Sure. So let's, I'm just going to move a little towards another side. After your seed funding, you raised a Series A,
Right.
and how did that come about? And one of the biggest VC firms in the world chose to.
So see, as I said, if you do something with conviction, the market or the entire thing will start recognizing you. So the flip side of it, when on the seed stage we spoke to 80 VCs, right? On the Series A, we have not spoken to anybody actually. We haven't moved our feet out of our office. Okay. What happened is our news of the funding and going like KredX. So we basically was Monday. We rebranded ourselves to KredX in somewhere in during May time frame of 2016. Okay. That's the time when we did a little bit of PR exercise saying that hey, now we are being rebranded as KredX. Right. And we came out in the market like literally out in the market with news articles and everything. And that is the time we get a lot of inbounds from VCs who say, hey, this business looks fantabulous, and I want to be part of this story. We're not raising any fund at that time. We're like, we have fund, we don't want to raise fund. But people are like, no, we want to meet. And similarly in our office, almost 4 VCs has came into and met us. And Sequoia was one of the fastest to give us the term sheet. Okay. And I still say Shalan Singh from Sequoia, who sits on our board, he was the fastest to understand my business than anybody yet in the world. And he said within 10 minutes of our meeting, he said, guys, I'm sold. I'm like, I want to be part of Sequoia, to be part of the growth story. And he said that by evening you will get the term sheet. So that's kind of and we're not raising. So he asked how much you want to raise, and just say maybe 5 million. And he said, okay, I'm done. And he didn't ask anything. He said, okay, 5 million done. And he sent the term sheet, and we actually raised 6.25 million. So that's more than what we asked for. We signed. We said that okay, let's not waste too much time on fundraising. Sure. A lot of startup, spend a lot of time in fundraising. We're lucky to get so fast from support from Sequoia. And we said that why not, let's move and just close it and head down, focus on the business.
Very interesting. So one of the takeaways that I have from this point that you made is that focus on the business, the
Absolutely.
money will chase you.
Yes.
If you build a good, robust
Yes.
business model,
Yes.
and well, you chose a partner who seemed to understand you
Yes.
very well.
Yes. It's very, very important that you choose the partner who understands your business, who align with your philosophy,
Right.
who align with your vision.
Right.
In the long term, it's always good. But at the same time, please understand that you are there to do a business, right? You are there to solve a problem, not to
Sure.
raise funds.
Sure.
In the journey, most of the companies startup lose the track. They thought that their only job is to raise funds, but it's not. Their role is to do something else, right? And we keep on telling it to companies that we finance, like through invoice discounting.
Right.
We tell them, hey, leave your working capital worries to us. We are there. We just focus on your business, right? That's what you as a when let's say you start like any shop, like let's say you start a shop, your entire effort is to basically have the inventory, sell it to the customers and that.
Sure.
But if you spend like 50% of your time thinking about that, how to buy these inventories, I don't have money, right? And you're taking the round of banks, you're not being honest with the business, right? So the idea is to head down, do your business, and rest of the things will follow it.
Interesting. Interesting. So I'm moving to something that most startups don't do, which is acquire another startup. And in 2017, you went out and acquired Hummingbird, an SME invoicing platform. Tell us how did you go about doing that, and how did you find need, what was the need, and then what were the challenges, and I'm sure integration challenges did come about.
Sure. So two things happened. So one, we are in invoice discounting space. So the natural progression from there is, can I go and develop my own invoicing software also, where the companies can use my invoicing software to base the invoice, and then that invoice we can discount, right? So it's a pure play critical. It's a pure play critical fact is, which is that you need an invoicing thing. And then also on top of it, what was the other thing that happened is we met Adam, who was the founder of Hummingbird, and we like him as a person. So it was sort of more of an acquihire rather than a pure play acquisition in terms of, so he was having a small team of 4 members. And we thought that it's mostly techies. So techies is something which is always required. We said, oh, why not, you guys come and join us and build this thing together and build it, make it big.
Oh, interesting. That's nice. So, Manish, one of the challenges that most startups have is how do you build teams, right? How do you inspire people to join you? How do you inspire people to stay with you? And how do you, so give us a little sense of how do you manage, what's your leadership style? How do you go about
Sure. So yeah, you are absolutely true. In the initial days, it's very, very difficult for you to hire talents, because anyone who is good is going to be in demand, right? And people will be there will always be somebody who is ready to give him a more salary and more everything as compared to him. So what is very, very important is for the person to get for the person to basically get aligned with your vision, your story, or your what you're trying to do. Right? We are lucky to get a lot of people at the initial stage who has, what we offer. Maybe they have a market offer of 2x or 3x better than what we have done, but they're sold on the story. They can take a pay cut, they can take everything to say that, no, I want to be part of it, right? Because this is something which is going to be big, and I want to be get associated with this bit, because that is where I'm going to work a lot. There's something fundamental change in the world that these guys are doing, and I'm going to be part of that growth story. Right? That is one. The second thing is, you also need to part with equities, right? So if somebody is taking a leap of faith on you, saying that, hey, I'm going to come and be part of your growth story, and like this is my story, then you also need to take a leap of faith and say that, hey, I'm going to reward you with ESOPs and stocks and other things, right? So those things you need to be very, very open with. In fact, when we started KredX, both me and Anurag was not a tech founder. We were looking for a tech founder, and we have hired at that time Puneet. And when we said that, we are even went ahead and said that we will be taking you as a co-founder. So we actually took him as a co-founder and say that we all be at the same level, because that's what we wanted to do. Even now, Devan, who heads our entire technology team, we pretty much consider him as a part of the founding team as one of the another co-founder in the team. So it's very, very essential that people needs to connect with the story. See, you are not going to be meeting customer all the time, right? With all the customers, all the touch points with the outer world. So you have to make sure that whoever is making the touch point have the same story that you are going to tell it to, right? Because the conviction with which you tell the story, it's required that the other person is also telling the story with the same conviction. He's selling the product with the same conviction. He's telling everybody what we are trying to do with the same conviction. And if it was conviction, the sales become easier.
Yeah, nice. So, guys, just for your reference, Manish and KredX have moved on from what, 1-2 member team to today over 120 odd member team across 10 locations across the country. How you came in from a professional large corporate background to suddenly, not maybe not suddenly, you did give it a long time, but to managing a team across distributed locations, people working in different geographies. To my mind, one of the other challenges I'm sure you had was how did you manage tech talent, given that you and your co-founder were not necessarily.
So we were very clear from day one, though we call it this is a fintech company. We internally, if you come to KredX, you feel like it's a tech company.
Okay.
For I think till December of last year, 2018, tech was my largest team.
Okay.
And now sales has become the largest team.
Sure.
But tech remains the largest team for good 3 years of our existence. And we fundamentally always used to believe that we are a tech team because, as I said, Mundi is not a new product, but we are trying to give it a tech flip. So you need to have a tech first approach into it. When most of the company in India and fintech will say I'm digital, we have actually got a lot of comment from our partners and other customers who say that though a lot of people claim that they are digital, you are the only guys who are digital because even if I want to do something like physically here, you guys just say that boss, it's not possible. We are actually a tech company, so we are, and the entire system was developed in house. Right?
Okay.
So from digital signatures to invoice uploading to invoice OCR of reading invoices to the entire discounting system, creating platform, everything was in house. So it was more like that you need to give the tech a free hand also, but at the same time tech is going to become the differentiator for you, right? So today, if you ask me what's the IP of my company, pretty much the tech, the system that we are building, right? And a lot of people is still come to us and say, hey, can we get a demo? Can we do a white labeling of your product? Because that's fundamentally has become the strength of our IP of the company.
Nice, nice. So what next for KredX? You've done you've had a fabulous 4-5 year journey.
Sure.
Where does KredX move?
I think we on an invoice discounting side, I still feel that we have not scratched even the surface of what it is. Just to give you an idea in terms of what could be the size of it. Today the the total that the government collects is roughly around 1 lakh crore a month. Right. So, and this is GST, right? So that is typically 10% of the invoice value. So we are talking about 10 lakhs crore a month.
Wow.
Right. That could be the market size of invoicing that per month. Right. Some part of it could be B2C, but some part is B2B. So B2B, maybe even if you take 50%, you're still talking about like 5 lakhs crore of that. So that can be done. But what we have also did some changes into KredX is we say why to be it's just the invoice discounting company. Our strength is cash flow based underwriting and cash flow based entire equation. So can I offer my customer something more than invoice discounting or working capital? Right. So the thought process was that for any company to grow, you need either a working capital or a growth capital. Right. You don't need anything else in between. We are giving working capital on the premise of invoice discounting. Can I start giving them a growth capital also or not? Right. So we are building some products to cater to the growth capital of the companies also and saying that, hey, I can give you growth capital, I can give you working capital. Right, and I can give you fundamentally then all the capitals that you need to grow, and you don't need to provide any collateral for that. Right, if you have a healthy cash flow, then why not? And we always say that cash flow is the actual matrix that you need to track. and revenue, etc. is just a vanity metrics, right? So that's it. So we are trying to move towards saying that can I become like a entire financing partner for my companies?
Sure. Nice. Great. Manish, I'm going to stop our session here, which is our conversation here, and let's throw open and ask for questions, if any. Guys, we are open to questions. Okay, I'm going to choose the questions that we pick up. We've got some a young, entrepreneur or an aspiring entrepreneur, a young undergraduate who's asking whether he needs to pursue a graduation. I would suggest that yes, you should speak. Education is a necessity. Okay. We are open to questions. Please ask questions. Okay. If I've got a question here, and Manish, maybe if you're okay, take that question.
So I think somebody has asked a question which says, if investor will invest in your business, in our business, but as a silent partner, then what will be the profit sharing ratio? Well, I mean, when an investor invests in your business, he is actually there for the equity. Now there could be two kind of businesses that we are talking about, and what we call in our terminology is one is a startup kind of a business, one is a dhanda business. Dhanda business is fundamentally the businesses which our fathers or forefathers used to do without any support from VCs. Right. So in startup kind of a business, if an investor is putting up the money, is only there for his equity upside, which is like tomorrow, if you raise the next round, he is going to exit, and his exit is fundamentally the rise in the share prices. So you don't need to do any profit sharing there. In the used plain vanilla dhanda business that we used to call, which you use friends and families' money to grow the business. It depends upon what other things the person is or the investor is bringing. If he's only bringing the capital and nothing else, then you can work it out an arrangement in terms of profit sharing, depending upon which year you're going into profit. So how much is the moratorium period before the profit of the business will start, and once the profit, and based upon that, how much money he's investing. So it's not a very straightforward answer to it, but you can definitely use some financial modeling in terms of how much his value is. So typically we say discounted cash flow. So DCF is one method where you can use and say that if somebody is putting up a money today, then and it led your business to grow from X to X plus Y, then that what percentage of it can be he could be compensated for.
Cool. All right, Manish, we have another question, which is about how did you attract customers? How did you go to the market? And over a period of time, how did you build from what I read last over 5,000 customers, and that's a very large B2B customer base.
See, a big part of how you get customers are what we call is two things. One is networking, and second is virality. Right? If it is a B2C product where you are going to an end consumer, virality is very, very important. Sure. What is virality is fundamentally, it's become very easier in today's world in social media. Is one of your customers writing a rave review about your product on social media, and believe me, it will become viral. The second is networking, which is fundamentally that from one customer can you get 5 more customers, right? Sure. Which you can say a word of mouth. But that is also becoming a very big part for our business. If you ask, we have grown not into virality mode because there's no B2C angle, but we have grown a lot by networking because there is one customer who comes to us to say that, hey, I'm supplying to a larger corporate A, can you discount this bill? And we say yes, and then he comes and say, but I'm also supplying to customer B, who is also a large customer. Now when I started doing customer A, I also take others of your customers here. So you need to see that how the network effect is playing into your field also, or in case of B2C, if you can create a virality angle into it, which is like start, and that's what again I go back to my customer service experience. If your customers are happy, they are going to bring tens, hundreds of new customers. If your customers are unhappy, they are going to let a right of hundreds of customers. So believe me, guys, in the world of social media, it's very, very important to have happy customers.
And the chief delight officer as well.
Yes, yes, you need to delight them. It's no, the making them satisfied is no longer required. What is required is to make them delighted. When you're delighted, then they go to meet social media sites and different places and talk about you, to rave about you.
Sure. Interesting. Okay. We will take a couple of more questions. One of the question being, when you're building your initial team or looking for co-founders, I think we did. You did.
Right, I think, yeah. So again, I just want to maybe say a sentence on it. It's very important that the initial team is going to agree to your vision of the company or the product. They need to be aligning with your idea, aligning with your vision, and see that yes, this is the path that we can see for the company. So that's very, very important at that time.
Okay, interesting. Okay, I will take this one last question, Manish, or maybe a couple more. So fundamentally, the question is about how do you compete with the large daddies? I'm assuming the banks and the large financial institutions. How do you, as someone who's young as an organization and nimble, how do you get
by being extremely agile and fast, extremely flexible. When something like, it's not only companies, but if anything is big, right? Because of the sheer size, the movement become difficult, right?
Sure.
What they compromise when they become big is flexibility. What they compromise when they become big is speed, right? What they compromise when they become big is inefficiency and bureaucracy,
sure,
right? Remove all those things from your company, and believe me, they will always get left behind. They become a follower of what you are already developing. They will become more like that. Okay, these guys are already doing this. These are the best practices. So you become the best practices of it, right? So that's the only way to cut through the bad.
Nice. The nimble, agile, innovative,
yes.
Flexible. I think those are the words that you have to go after. All right. Okay, so we have a question here, and I don't know how to answer this. If a person is looking at a startup right after graduation, what are the important points? So, what I would suggest is that you should first build out a model, validate it with a few people around and potentially even investors, and then come up with your next steps. Okay. I will take this one last question, which is, when someone is looking at investing in you, how do you decide what is the value of that investment?
Oh, you don't. Fundamentally, you don't decide on the value of the investors, share value and all. I think, I know a lot of entrepreneurs get bucked on with it and say that, hey, boss, no, this guy is not valuing me good and great. But what I believe is fundamentally that you only focus on how much you want to raise.
Sure.
Right? If somebody is giving you, and how to decide how much to raise is pretty much depends upon your own projection of what you want to do.
Sure.
And you need like a 1 or 2 years of the lifeline for your company, so that you can pay salaries to do the growth, to all those things, right? Once you decide on how much money to raise, pretty much whoever is the first guy should giving you the money, that much money, you should just take it and move on and do your business. Because the more time you're going to spend in getting the next delta valuation, somebody is giving you a delta valuation more, the more you are pushing yourself out of your business, or basically keeping yourself out of the business. I would rather spend that time in my business and raising my valuation for the next round, rather than thinking about a delta in this round. Right? So I would rather say that, boss, whoever is giving me the first check, which is basically what you are looking to raise, take it. Don't bother too much about the valuation and all. If your business is really worth it, you will get the valuation, you will make the money. I don't think anybody bother about in terms of it's like most of the time, Anurag, my another co-founder used to say that 100% of $1 million or 1% of maybe $10 billion, what do you want, right? So that is what it all goes into. You want to stick to your 100% and keep a smaller company, or you want to become a very, very large company and still hold maybe a fractional shareholding of that.
Very interesting, Manish. Thank you very much. Manish, we're going to, I'm just going to say thank you again for coming by and talking us through your experiences. Guys, we are going to do a lot more of this series, but let me say thank you once again to KredX and Manish Kumar, and all the very best, Manish, to your onward journey. Yeah. Thank you very much, guys.
Thanks, everyone.
Thank you.